right? Well, it's quite a short one if you look at the number of slides that I have, but I'll try to elaborate what I personally have gone through. So before I go on, I think maybe give you a little bit of introduction of where I come from. SEAA, Singapore Estates Agents Association, is actually an association making up of all the estate agency in Singapore. So currently, we are also opening up to other marketing agents as well. So in this industry association, what we do is to try to gather the industry's voices together and making representation to the government, etc. So in that, we have representation from all the big agency as well as small agency, very well balanced. And personally, my background is I started off as a valuer and doing some consultancy and research work before I go on to investment sale. And currently, I'm in the capital markets department of the Singapore's JLL, Jones Lang LaSalle. So today's topic is not unfamiliar to me, but although in the segment that I'm covering, the malls and hotels, it's not something that I do every day. But I'll try my best to try to give you some background as well as the principle about the sale. Right, hotels and malls as commercial property, they share many common characteristics. First of all, I think they are income producing property and they provide regular revenue streams. And they are also, people look at it as an investment asset and usually look at it from the returns point of view. They look for yields and return, etc. And they are also attracting developers, local and foreign investor, property fund, even sovereign funds or conglomerates, and down to family offices, etc., to put their money into all this asset for investment purposes. And they usually require very significant management and the marketing skills, right, in terms of making this property a successful one. So the sales of the hotels and malls usually require very in-depth understanding of the properties and the financials. So there are two parts to it. Their respective market they are in, as well as also the market outlook and the geopolitical and macroeconomic indicators. So we look at selling an investment, be it a property or even other financial product. The global outlook, macroeconomic factors are quite common. But when you go down to the market itself, the property itself, then you have to look at the micro aspect of it. In terms of the macroeconomic indicators, you look at the performance of the country or the city where the property is located, right? You look at the GDP, gross domestic product, or per capita income of the people, as well as a disposable income, employment, whether you have a working class, a big middle class working population, because these are also the support, especially for the malls in terms of their spending, right? So this key driver of the economy of the country also will have a lot of impetus and also effect on the growth of the property market that these two types of property are in. You will also look at there are other factors that are related to it. And from the political point of view, you look at the stability of the government. The change of government of in every country will tend to bring along with changes that affect the business environment as well as the investment environment, right? So you look at their government policy, whether they are pro-business or they are often flip-flops, meaning changes that affect the market every now and then. So these are the things that the investor will look at, both the economic and the political part of it. So a good government or stable government will be able to see through a beneficial implementation of long-term plans as well. Right, in terms of the market indicators for the two segments of the market, meaning the hotels and the malls market, the common key indicator will include the demand, supply numbers. So these are very basically research-based, and you look at the historical vacancy rate, take-up rate, as well as whether these are sustainable. And you also look at the stock. I mean, currently existing in the market, how many of them already in existence, and the supply as well as the upcoming projects. So these are the numbers, hard number that usually not difficult to find. And obviously, in terms of the mall that you are going to own or you are going to sell, right? The income producing capability is very important. How the rentals market are doing for the mall, and for the hotel, what's the room rates that currently trending, etc. So then you look at what other investors are paying for all this style asset in the vicinity or in the market currently, in terms of the price or the capital values. So you have to look at it very carefully in terms of the projections going ahead, although you might quite easily find the historical trend. And of course, what other expected returns that investors are looking at, it become your guide, because that gives you a very much gauge as to the competition that you might be facing in terms of buying a property and selling the property. And of course, the local authorities' planning objective, as well as their long-term plan for the area, be it for the hotel or the malls coming up, is very important. I think you have heard also our earlier presenters talking about building more and more malls or multi-story malls, etc. in the area where you can see that there are changing trend, the population are dropping, etc. Those are all the very key indicator that you should look out for to see whether when you sell a particular project, a hotel or the mall, whether this is going to be a sustainable business for the investor. Right. In terms of hotel, one of the more so-called intimate figure that you look at, it will be the tourist arrivals number. Even the tourist country of origin and their length of stays are important because that means how much they are able to spend. Right, the capacity to spend even if they are staying on. So these are numbers that if you can find, it'll be very helpful to your hotel's evaluation. Right, and as you know, the target market segment is important for a particular hotel because hotel usually classify or position themselves, right? Whether to the luxury segment or the mid-market or even the mass market. So this target market segment that you have to dive deep into the statistic to look at how the performance are for each particular segment. So this segment performance is also critical for the type of project like hotel that you are selling. In terms of more, as I mentioned earlier, the consumer spending power, the disposable income level is very important, right? You also be looking at changing trend in spending, right? What kind of type of trades that you want to attract into the mall is also very important, right? There are changing trend. I think in the past, if you look at a typical mall, they probably, the food and beverages probably take up about 10-15% in quite typically. But in the current situation, especially after COVID, and look at all the online shopping, etc., you'll see that food and beverages now take up probably up to about 30-40% or even more of a particular mall. This is especially so in the Singapore's mall. We can see that in the past, the food and beverages only make up about 15%, but they are now about 45-50% because most of other apparel, shoes, etc., and others trades, they are all diminishing it from the mall because of the online trade. So these are the moving trends that you got to be, watching out carefully as to what kind of positioning that the mall can take. Right. So importantly, of course, footfalls, meaning the number of visitors, the number of shoppers that go into your malls, and usually in terms of research, we look at their primary catchment area, usually within a certain kilometer radius. Who are the people, what kind of population, and what kind of, even the income level of the population within this catchment area are the important one, right? So there are also many types of mall you look at. There are those in the city center that appeal to a wider audience, including tourists. There are also those in the city fringe or suburban malls that cater to the locals and the neighborhood. Right, market outlook is another key indicator you should look at when you are trying to sell the mall or the hotel, because this is what you are going to present to your investor, right? And the overall outlook, including the geopolitical and the local political situation, and the global and regional economy. And also, there are general trend of the property market that we have to watch out for. In general, how the property market perform as a whole, but when we dive down deep into the particular project that we are selling, whether it's a hotel or that mall, we have to look at the relevant market segment and their interplays and dynamism within it, right? And specifically trend relating to hotel and retail mall segment, you probably have to look at the rental or the room rates, the occupancy trend, the capital values and the use forecast, and of course how this revenue is going to be sustainable, right? And as you know, especially after this, the recent geopolitical situation, we are seeing that rising costs and inflation actually costing a lot into all this daily life, right? So these are all the important factors that we look at it. Obviously, when it comes to the sale itself, nothing beats understanding the property very well, right? You have to look at the property and understand it very well before you can actually look at it and try to sell it. First of all, of course, is the legal part of it, right? Whether the mall has got a tenure in freehold or leasehold, etc., meaning the use rights. As this, especially in particular in some certain jurisdiction, you can own a hotel or mall in perpetuity, right, as a freehold, and that's also become a wealth preservation target for many investors worldwide or the high net worth people, sovereign fund, as well as family offices. And of course, in every jurisdiction, you have your own ownership restriction, right? You are, especially for foreign investors coming into a certain jurisdiction, you might not be allowed to own wholly, etc. So you have to look at the structure of the ownership and how are you going to extract the return following this ownership structure. And the planning and development control part of the project or the site of the land that they are sitting on is also very important, because you need to know what kind of allowable usage as well as the density and allow for the mall, right, or the hotel. And you also need to have the understanding of what is the potential if the potential buyer were to come to look at the change of use, as well as whether they will have potential for them to tear down and redevelop, right? For old malls or old hotels, the redevelopment may be an option for them to consider. So in selling this kind of investment property, you also look at how they are going to exit from their investment later on. The physical aspect is probably very so-called factual, right? You look at the land size, the shape, the building design concept, as well as many other composition in terms of how many rooms they have, function hall, conference facility, restaurant, etc. Right? So all these are important aspects of the product that you are selling. And there are many also complementary and supplementary users within a development like this that we are today, like a hotel, we merge together. So these are, whether they are complementary or some supplementary users is also important for you to consider. And of course, the age as well as the state of repairs and maintenance, because age and the states of the repair and maintenance will affect the running costs, right? So that you have to look at carefully before you look at the numbers. And then come to the market positioning, looking at each and every hotel or mall, they have their target market to go to. So you have to look at whether they are targeting the luxury, high-end or mass market, etc., to decide where is the price point or sweet spot for this particular project, right? So in terms of mall, you sometimes even look at a mall that is very specifically focused on certain trade. Like for example, they attract all the traders selling IT product or services, right? IT mall, etc. Very focused. So what may this property, this hotel or the mall offer to the shopper or the guest, right? The kind of user experience that this particular property is going to give, right? It's become a certain selling point that you have to take note of. right? Of course, come to the investment property, you cannot run away from looking at the financial numbers. Financial number is one of the key aspects. In fact, very important from investors' point of view. When they are buying the project, they need to know the numbers very, very well. So you have to look at the numbers in terms of the recurrent income, the taxes, the operating expenses, even potential replacement costs of major components, right? We call it CapEx, capital expenditure, and so on. Then, like I mentioned, if the property is the older one, you have to look at the potential asset enhancement initiative that the potential buyer can do. So they will definitely factor in terms of the cost they are going to incur in the asset enhancement in order for them to get a better return in the future, right? And last but not least, looking at the redevelopment option where for potential buyer who may eventually want to tear down the old building and rebuild it into a new one. Okay, so the rest of the financial are pretty technical, like for example, looking in the internal rate of returns, the holding period, etc. So these are the potential numbers that they will have to do a lot of research on and look at what the market numbers are in order for them to decide eventually what is the right price for the investment. So the of course, very close to every property is always a location attribute that we are talking about, right? You're talking about, I think we have our earlier speaker who talked about location again. But many years ago when I first entered the industry, I had a very good mentor. He was actually a professor in my school that came out in the private practice and in a consultancy work. In fact, what he told me about these three words, location, at the end of the day, it should be replaced with connection, and connection. Right? Because a location is nothing without connection. Connection to what? Connection to everything. Right? Whether the location is unique in terms of the connection to history, the story, it makes a significant impact on it. Attraction to the local and the tourists, which part are they attracting them? Not just because they are centrally located, but because they are centrally located simply because they have transportation, they have good connectivity and good supporting activity. And even for the presence of some unique offering within the surrounding area makes the location. So regardless of what happened to a particular physical location, at the end of the day, you must see the evolvement over time, whether these connections are changing or not. So these are the things that makes a location great. And what makes a location great is the connectivity and the connection. Right? So these are just all the factors that make it great and so on. So location may change when the connectivity and connections change over time, right? So it's very important for the location to maintain the vibrancy as well as whatever they are enjoying right now. So over time, this will become then the valuable part of the asset. Right, so in terms of the sale of this type of property, we look at a few key selling points. All right, I think in terms of sale, I think we often look at people telling you 20 good points about the property and things like that, but the more you talk about it, the more you're not going to focus the investor's attention. So generally speaking, when we do marketing, we tell ourselves 4 to 5 bullet points. 4 to 5 bullet points. Focus your investor on 4 to 5 bullet points. And you must be careful in what you select as the unique selling point, the key selling point. So it can come from many things, right? A good view or reputation factor of the property itself or the area itself, right? What is important? And if the property is being positioned in the market correctly, appealing to the right segment or not, right? If that's a good one, you might want to capitalize on it or leverage on it as a selling point. Is there any compelling reason for guests or support to keep coming back? So say, for example, I take the IT mall as an example. That's the only one that provides you all sorts of IT services and products. right? There's no reason for you to go to any other mall when you want a computer or laptop or something like that, right? So these are the compelling reason of market position, unique market positioning that you try to attract. So if that's the selling point, then you want to hub on that, as well as other things like convenience factor, right? In terms of mall, you have whether they are destination for family and children, or working adult, or the well-heeled, or the trendy, because they each have their own different concept and design to appeal to people. Right? So in terms of others, for example, if the mall's performance is very, very strong financially, that's also a very key high selling point to the potential investor. So there are many aspects you can look at, but bear in mind, try not to highlight too many things that you distract the investor's attention, but keep to your 4 or 5 points. All right, okay, I think the last point I'm trying to highlight here is also whether there's a future growth story, right? The government plan for the area, that's also a very important one to then sell the potential of the property. Right, okay, next, after having studied all the financial, the physical part of the property, etc., is for you to reach out to your buyer, right? So you look at how many method or mode of sales that you want to go to the market with, and generally for this type of project, we tend to go by private treaty if it's a very big project. Private treaty means it's through private negotiation, through your connection, etc. But you may also go by a public tender, especially those property may be owned by a certain, say for example, a certain public authority, etc. They might want to go through a tender process, or even the expression of interest, meaning you go reach out, you've set a deadline for interested party to come back. We call it the expression of interest, right? So these are the different modes of the sale that you can try depending on the type of property and the seller's intention. And in terms of the marketing collateral, when you go to the market, you probably need to prepare a very comprehensive investment memorandum detailing what are the so-called physical planning parameter, even the research trend, as well as the financial, right? So these are the important documents that you want investor to have a very good grasp about it, good understand about it, before they can actually, confidently make an offer, right? All this documentation, of course, you have to back it up with a reliable data, trusted research data and statistic, and the physical composition of it, as well as even the state of repair and maintenance are important. And very often nowadays, beside maps and photos, right, the 3D virtual presentation, etc., are important. So we even have a drone marketing video highlighting the location and the key selling points that I mentioned earlier, right? It's very important nowadays for drone video because you are appealing to an international market. So some of the investor may not readily be in town every time, right? So the drone video actually give them a very, very good idea about the location, the property itself, etc. So it become a very appealing selling point today. So having done that, with the collaterals, etc., you can reach out to the capitals, meaning to the monies where they are. This is usually through a very your current network connection and medium, because selling a mall or hotel, such a big property, it's not just advertising in a newspaper or any media that you can get the investor attracted. So usually it's through a very constant or consistent connection with this network of people. For example, there are funds, there are corporate investment houses and things like that we regularly get connected to. So we know what they are looking at, what kind of return expectation, etc. they are. So this is the one that you know exactly who to go to, right? Even if you were to do an advertisement through a global platform, etc., you got to be prepared, because people whom you don't know may not know your country that well. Then you have to spend a lot of time and effort to educate them, right? So these are the things that you have to watch out for, and when you talk to them, speak their lingo, right, in terms of their cash flow, in terms of their IRR returns, etc. So these are the important points that you got to learn, to position yourself from the investor's viewpoint. If they were to buy a particular project that you're going to sell, what do they look for? So all this, even to the extent that for very big projects that we are trying to sell, sometimes we even have to link it up with the debt or even equity partners, right? Getting a joint venture together, helping them to buy a very big project together. So these are important things that you're probably in a network of teams of colleagues that you have to each take up the respective part of your job to solve a deal together. Right? Obviously, there are people who do eventually have to come down and take a look at the site of the property. So the prospective purchaser may even bring their own professional, like engineers, etc., because they also be not just looking at the beautiful part of it, but they also go behind the scene to see all the M&E services, whether they are functioning well, whether the lifts are being maintained and serviced regularly, etc. So these are the type of stuff that a potential buyer will look at, right? And of course, you have to prepare a very comprehensive documentation for the property. We call it, all those data related to it, we call it a data room. In the past, we have a room dedicated to it and put all the document inside that room. Then whoever who wants to buy or intention to buy, they have to sign a non-disclosure agreement, because this data may involve some sensitive information that do not want them to go out and disclose to others. So they have to sign an NDA and before they can go in. But today, with the advance of technology, of course, some of all this data are all provided in the virtual data room. So we have an online data room, so to speak, for people to go in, sign the NDA, and then they check all the data before they go on to look at the physical. So these are the important steps in terms of selling such a big property. Due diligence stage after the data room, right? You probably go to the stage where they are prepared to make an offer at a certain price, and some of the broad terms and conditions might have been agreed, or even all the detailed terms of sales have been agreed at this stage, and subject to some due diligence as to what further investigation they might want to do. That include the scope of the technical due diligence, including the engineering aspect, the building aspect of it, as well as the numbers, right? Whatever numbers are presented, I mean, obviously, investor will have to investigate and verify. They won't take your words for it, right? So these are the so-called due diligence that they may go through, right? So for things that they may have doubts, or they'll query or seek clarification from you, as well as maybe your vendor, before they finally, prepare to go into a deal and conclude it. So the final negotiation of term, if required after the due diligence stage, may still involve a certain to and fro. If certain, during due diligence stage, certain representation may not be that accurate, they may result into some negotiation again. So that may then lead you to the final conclusion after the negotiation, and once you close it, yes, you have to be prepared then for all the handing over. That's also another big list of things to do. I'll just put here with one bullet point, but there's really a lot of work to do after that. But at least at this stage till this stage of time, you know that the deal is almost concluded, right? So, and move on to the conclusion of the sale, right? And so on. So my presentation is here is till this stage. I hope it give you some broad guideline or framework. However, if you want to understand a little bit more about the detail, etc., feel free to get in touch with us or the organizer for the slides, etc. You can always come back to us. Happy to share with you. All right, thank you.